South Africa dominates in deal size and in sophistication, and in many ways is a separate market. Outside SA, transactions are small, and I think it structurally becomes difficult even at the moment to spend easily $100 million, certainly if you want to avoid the resource sector. So what role does private equity play in Africa? Is Africa different? I spend a lot of my time going around the world telling people that Africa is no different. When I used to work for my Nigerian bank, we had a head office in Ghana, in Lagos, 18 stories, 2,000 people, accountants, secretaries, internal audit, risk managers. It's no different from any other bank in the world. But I'll go to the US and they'll say, are there stock markets in Africa? You go, well, yes, actually there are. There are 14, 15 that function. Are there banks? Yes, there are. Is there risk management? Good, yes. Is South Africa ranked the top risk management capital in the world in terms of banking? Yes. So in many ways, I think when I'm telling the story outside Africa, I'm saying Africa is no different from anywhere else. It's going through ups and downs, but you should look at it no different than you should look at Brazil, China, or India, or Eastern Europe, or even, dare I say, the UK and the US. However, if one looks at what's going on in this particular market, yes, there are some differences with the rest of the world. And in fact, those differences, I think, make private equity in Africa particularly interesting. Private equity is generalist. If you look around the world, most private firms often employ specialists. There'll be a financial services person. There'll be a consumer person. Because the deals are smaller, you almost have to work harder. You have to think more like a businessman. You have to be more opportunistic, less formulaic. If you go to the US, certainly over the last 10 years, 15 years, private equity was in many ways a simple game. You bought a company with cash flow, you altered its financial structure, you labeled it with debt, you took out a big dividend, you pushed it on the market, you say goodbye. I think Mr. Romney is repeating maybe something from that model now. I think in Africa, private equity needs to be much more entrepreneurial, much closer to venture capital. I think another one of the characteristics, and this I feel as someone who invests in public equities, is that private equity very much intrudes onto public markets. I was just looking through our own portfolio. A number of the stocks we hold are also held by private equity players. So Diamond Bank, a fascinating, fast-growing bank in Ghana, targeting the SMEs.
So I've taken a minimum population of 1 million people. I've taken GDP minimum 10 billion US dollars. And those were my only qualifications. And then I added to that per capita GDP, so not only size but wealth. The average annual GDP growth between 2001 and 2011, which is a nice period because it also allows you to get an idea of which countries, it's until after the recession, you can actually manage the recession fairly well. And the last one is the government debt GDP percentage. And the ranking, the countries that actually qualified were only 24 of them. So I assigned marks based on 24 if you're top of the heap with regards to the biggest population, etc. And I translated that into the percentage. And the interesting thing is that Nigeria is on top with 85%. One of the reasons for that, of course, is that because of its oil exports, it doesn't have a fiscal deficit. And Angola comes in number 2 at 82%, Equatorial Guinea at 71%, Ethiopia at 68%, Ghana at 67%, and South Africa is in 6th position with 66%. Just an interesting point.
One, I think you underplay the critical importance of skills. I mean, the fact that we have significant skills shortage, and both an internal constraint, or rather a constraint that has to do with internal factors. We did touch on education, but also we live in a world where there is competition for scarce talent, which is why you're most likely to see, for example, in the banking sector, where there is a need for high skills, and other services sector, nationals from other countries to fill in those skills gaps. Which is a good thing because it does have spillover effects in terms of culture and professional practices. The second thing that I wanted to perhaps reflect on is I think we also need to look beyond private equity flows in Africa. I think there is dynamism driven by other financial vehicles such as sovereign wealth funds, especially from countries such as China and Gulf cooperation countries, your Saudi Arabia, Dubai, and directed to infrastructure, real estate, and services.